ahead and get started. So good morning, good afternoon, good evening, everyone. My name is Olivia, and I'm the operations manager for the Hive in Silicon Valley. So before I pass the mic over to Angel and Heizem to introduce our speakers, I'll quickly just go over what the think tank is and go over some of the webinar best practices. So we love questions. So we would love to have you utilize the Q&A button at the bottom of your screen to ask our presenters any questions, which they'll answer throughout the discussion and also at the end of the session. The webinar is also being recorded and it'll be available on our YouTube channel. So make sure to go check that out just in case if you need to leave early or anything. But with that, let me just do a quick introduction of what the Hive think tank is. So the Hive think tank is an ecosystem of leaders, corporations, and entrepreneurs. And the Hive Silicon Valley and the Hive Southeast Asia are bringing you events and content that's focused around AI, health, Web3, sustainability, and so much more. And actually for the Hives in Silicon Valley, we do also have 2 upcoming events in early November, which are focused around insurance distribution and the emerging security landscape. And I'll go ahead and link those events in the chat box below in case you are interested to join those webinars. Lastly, the Hive is an early stage venture capital firm, and we leverage data and AI to drive kind of new opportunities, to drive differentiation across a broad set of industries, including health, sustainability, mobility, insurtech, and much more. So the Hive does start companies with entrepreneurs, or we also fund kind of early stage companies, and we have about 30 investments globally with about 10 exits and also 3 unicorns. So with that, let me go ahead and pass it over to Heizem to introduce the Hive Southeast Asia. Heizem, are you there? Heizem, can you hear us?
Hi, my name is Said Heizem Jamlul. Yes, I am. Yeah, I can you hear me?
Yes, we can hear you. We just can't see you.
Okay, so yeah, no, so I switched off my in case the Wi-Fi is something wrong. But yeah, so I'm Said Heizem Jamlul. I'm the managing partner of the Hive Southeast Asia. Just quickly, we are partner fund of the Hive in the US, which is obviously you've mentioned, and includes the Hive Brazil, Hive India, with the 4th iteration, the Hive Southeast Asia. We received a mandate from the Malaysian government to run the Dana Penjana National Fund, early stage co-creation and seed fund, which is partnership between my Tuas capital partners, the Hive, and as well as the Sunway Group. Really looking to invest into early stage technology companies that will digitalize Malaysia and Southeast Asia into the 4th industrial revolution. Currently, we have 7 companies in our portfolio, and we're looking to catalyze quite a few more companies in the near future. We haven't had a Hive think tank in a few months. So looking forward to this Hive think tank. I'll pass it over to Angel to introduce the speakers. Thank you.
Hi, good morning, guys. Thank you so much for tuning in. Without further ado, I'll just quickly introduce our panel of speakers. Thank you so much, Neng and Han, again for joining us. So Neng is formerly CEO and co-founder at Healthcrowd, and also recently just acquired by MPOS Mobile in December 2021. Maybe Neng, I'll pass it over to you for you to quickly introduce yourself.
Yeah, hi everyone. Good evening from Silicon Valley, and good morning to the rest of everyone who might be in Malaysia. Again, my name is Neng Bing Doh. I go by my middle name, Bing, but I'll respond to most names. Originally from the PJ area in SS2, if you're familiar. I've lived here for 25 years now. I guess I came here to go to undergrad, never quite, went home. Long story short, I have a degree in computer science from University of Wisconsin-Madison, and later on went and acquired an MBA from Cornell University in upstate New York. Spent most of my career in software engineering and product management. And in 2013 decided, well, right in Silicon Valley, might as well start a company. And that's what I did. Very fortunate as a first-time founder to have successfully sold the company last year, just in the nick of time before all the multiples went down. And I'm happy to share my experience with you, and hopefully it'll be helpful for those of you with entrepreneurship aspirations.
And thank you so much, Neng, for the quick introduction. I think everyone else here in the Malaysian tech ecosystem also probably know who is Hann, serial entrepreneur who co-founded Ringgit Plus. Hann?
No, thanks for that. I am sitting in KL, so morning to everyone and evening to you guys in the Valley. Thanks, Angel, for that. For those of you who don't know me, you can just call me Hann. I am Malaysian as well. I am a former investment banker. I'm a mathematician by training, but former investment banker in London. I came back to Malaysia from London in 2010, and kickstarted my entrepreneurship journey over the last kind of 11 years. It's been Ringgit Plus and the Jirnexu group, of which Ringgit Plus is under. And I've held obviously many roles being founder in the business, from all the way from marketing to HR, finance, and obviously running the company. These days, I'm less day to day, so can give a sense of how do you make your startup or your business a little bit more ready, for professional management, etc. So happy to talk about that too, if there are any questions on that.
From the Hive Southeast Asia, I think it's very honored to have Hann and also Neng today to join us to discuss the topic of achieving product market fit, and which is such an important topic. We've been talking about startups having the right product market fit and then getting investment from from VCs, and I think it's widely understood that finding the product market fit is really, really, really important. But again, my poster kind of mentioned, the how to get there is actually less straightforward. Something that you might not just you just Google it, how to do it, and then you can actually just find out how. So maybe since we have two experts here today, and really would like to understand, maybe you guys could share about what's the journey like, when Neng, you're running Healthcrowd, and Hann, when you were running, Ringgit Plus, right now Jirnexu, what the journey like, when you find product market fit for your individual companies?
Han, you want to go first?
I was going to pass it to you first, Neng.
Oh, sure. Yeah, no problem. So in my mind, product market fit is having a product that satisfies the needs of many, such that they are willing to pay for it. And those many can be individuals, SMBs, enterprises, or all and everything in between. To better understand and take away learnings from my journey at Healthcrowd, I think it's important for me to set the context and just quickly explain what we did. So Healthcrowd was a digital communication solution for the US healthcare market. So in short, we sent targeted text messages, automated phone calls, emails, and mobile websites to patients in order to get them to take healthy actions. And these actions, could include taking their medication, getting a checkup, helping a diabetic with culturally appropriate nutrition, encouraging someone to exercise. You get the idea. So Americans are not used to paying for their own healthcare. So we knew that the direct-to-consumer or B2C was not the best route for us. Our first several pilots were with rehab facilities. For example, cardiac rehab, substance abuse rehab. And now, even though the pilots were very useful to us, it was soon clear that these rehab centers were, we were a nice to have. We were not a must have. I don't think nice to have qualifies for product market fit, just saying. And also each implementation required a lot of customization. And in my mind, that's another no-no. You don't have product market fit when everyone's different. And last, the market size wasn't big enough. So you can have fit with 2 people, but that's, not a company that's going to grow. So anyway, so I decided, okay, no more cardiac, or rehab centers. So next I decided to pursue hospitals. In particular, there was a hospital near my home at that time that serves low-income individuals. So I started pursuing their chief medical officer to give us a shot. And after several meetings, still no answer. Ultimately, he told me, Bing, why don't you just sell to the people who pay us? And I'm like, who pays you? And you guys should understand that prior to starting the company, I had never done anything except for software engineering. I really didn't know much. And I surely did not know how to sell. But you learn, and it's a ton of fun. And so what he said really opened my eyes to a whole world of government-sponsored health insurance that exists here in the US and in some other countries. And basically, he told me to sell to health insurance companies that take government money to provide healthcare to our country's low-income individuals. And from there, adoption picked up. We were able to sell the same solution using the same use cases to the same type of customer. And there were many of them, and they were all very big. And I think it's safe to say that at that time, we felt that we had achieved some level of product market fit. And at that time, we were able to raise our Series A, a proper Series A, after having done, 2 seed rounds. So hopefully that was, sort of helpful.
Wow, Ning. So quick question, how long did it actually take you from, pivoting from the rehab center all the way to the, targeting the hospital or even the government sector? How long is that journey?
It took a while. Enterprise is slow. So 2013, 2014, we were still selling to like little centers. 2015, we did the first pilot with a major health insurance plan in this country. That was also the first year. I know it's really crazy, but the US wasn't an early adopter of things like text messaging. We ran the first large-scale healthcare-related text messaging program in this country in 2015. And in 2016, we landed Anthem, which you guys may have heard of, major health insurer, and that's when things started to really pick up.
And I think for the audience, like even Ning, that she has raised like multiple rounds, and even until Series A only, right, Ning, in your own words, it's like you only have achieved some level of product market fit, even that is like not 100% sure. So that is like really interesting. Maybe Han, next, maybe you could kind of share us your journey on, how you found the Ringgit Plus and what's the journey like achieving product market fit. Yeah.
In the context of product market fit, I mean, how I would define it is when enough customers are paying enough money, I guess, for your product.
I like the comments from Ning and yourself when the customers are paying money.
And paying you enough to run your product indefinitely, right? And you think of your product as a business. Like if you have enough business, you can continue running your business. Otherwise, you cannot. So it can be as simple as it can be as complicated as running software for health insurers. That's awesome. Or as simple as setting up a barber shop around the corner. If you don't have enough customers paying you enough for your product, you continue running it indefinitely or going forward, and you don't have product market fit. As simple as that. So in the context of, I guess, Ringgit Plus, we started quite simple, right? So I came back from the UK in 2010, and I was former investment banker, mathematician, blah blah blah. Something funny I realized back in the days, almost 12 years ago, in Malaysia at the time. It wasn't that easy to find information on consumer financial products, so loans, insurance, deposits, etc. It's not that easy. You had to go, bank branch to bank branch, pick up some brochures, and check it out and see what's good for you. Right? And because I had spent time in the UK as an adult, my entire existence in Malaysia was till the age of 17 at that point. So I didn't have things like a bank account or credit card or loan or insurance or anything. So that was a big drag on life, having to go from bank branch to bank branch. So a couple of guys and I thought, hey, why not? Let's stop this. Let's figure out how we can take this to this new thing called the internet, and put stuff online, let people research from themselves, on various consumer financial products, and hopefully they'll apply for it and get products, and then we'll get paid by either them or banks and insurance companies. So that was the simple premise, simple idea. Right? So we stuck it on. So arguably we had product market fit because we had, after a year or two, like hundreds of thousands of consumers actually using the service, going online, browsing, comparing products, clicking through to a bank to see what they had. So you would argue that, hey, look, a few hundred thousand people after a year, it's not too bad, right? It's pretty good. But big issue, like none of the people that were browsing, researching, getting educated on their financial products and situations were actually the one paying us for it. And number two, like they weren't actually getting the product online. So what they were doing is getting educated and then going from bank branch to bank branch, getting their products in person, right? And so arguably, like if you think about it, like according to my definition, we don't have product market fit because nobody was paying us to do this, right? But we knew there was value. So how do we generate that value? It was really fixing that last gap, right? Which is people using our service, Ringgit Plus, as a catalog rather than a purchasing channel. Right? So we spent about a year or two trying to fix that, right? And building bridges, I guess is the word to use, and you can call it APIs, but I'll say building bridges into core banking systems, such that banks and insurance companies can actually accept this online. They actually couldn't way back in the day. And turns out that actually banks and insurance companies were our customers rather than consumers. And they essentially paid us enough to continue running the business. So that's when we established product market fit, when enough banks paid and insurance companies paid us to essentially process customers which they actually already had. We just did it online. So that's kind of the start of discovering product market fit. Obviously, things have changed since then. We can talk about that in a bit, but yeah, that's when we realized that actually.
I'm sorry, a follow-on question. What is enough business when you say enough business?
Very simple. It's okay. We have X number of people going through the service. None of them are paying us anything, right? How much would a bank or a number of banks pay us for that service? Which is, hey, look, like we're essentially like a online supermarket for financial products. How do you pay a supermarket if a customer is not paying for it for the product? It's the brands who pay for the product, right? So for us, it's as soon as like enough banks were paying us enough to actually maintain the service, keep the website running, keep our people hired and paid, and our server cost paid. That's when we said, hey, look, like clearly there's a need for this. We're getting paid for it, and it's enough to sustain the business. And then any venture funding we would take would be to accelerate the growth that we were already experiencing versus getting to product market fit. So yeah, that's kind of how we saw it at the time.
Got it. Thank you so much for the quick summary of what is enough business. I guess, Ning, just now you were mentioning, during the process of really searching for product market fit, you were talking about customization. No. And just a follow-up question, right? Like, what is highly customized? Sometimes even for startup itself, if I secure a big client, I would want to customize for that big client. Then I could have that client in my database. It looks good on my profile. So how do you know that you need to stay away from that kind of highly customizable business model rather than pursuing this particular big client? Yeah.
Fantastic question. A big client says they're going to pay you money, you say yes. Doesn't matter what you want. And then I think one of the rules we had at Healthcrowd was whenever somebody said, oh, I think we should do this because this customer wants it. What I asked them is, okay, first of all, how much does this customer want it? Meaning, are they willing to pay for it? And then if we were to do it, are there 100 other customers? You have to understand there's only about 400 health insurance companies that matter in this country. Are there another 100 companies that will pay us for this? And if you can answer both, we can make a case to build it. So it has to be scalable. It can't just be, you know, professional services. Whatever you build, it's, you know, to further develop the platform, and you want to be able to sell it and create value for other customers beyond that one.
I guess like going back to, you know, Han yourself, you know, you're within fintech space. It's a very competitive space here in Malaysia, especially with the rise of digital banking, licensing and what's not. So how do you constantly ensure, you know, your product actually captures more market and it never loses your product market fit in a way?
Yeah, no, that's a really good question. I think if you think about how we got going, right, it was the lack of capability of the industry, right? And then as you build capability for the industry, you're essentially shrinking your own competitive advantage, because you're like, well, I actually can do this, right? And the more I do this, the more it enables, you know, my clients, not customers, our clients, so banks, insurance companies, do it better for themselves. Then you've got to go back to what actually makes you valuable, right? What actually makes us valuable is not our capability to build bridges into banks and insurance companies, right? That's just how we make money, right? What makes us valuable is our service to the customer. That yes, we do it for free for them, but the service is so good that they don't want to go anywhere else, and we get seen as the place to go first, right? And we need to continuously invest in that, right? To then build that cycle, right? So classic example I'll tell to most people here is, think of a shopping mall, right? Like technically, like if you're a big retailer, right? You're a big kind of department store. You can just build your own. You can put your department store in your own building, right? You don't need a shopping mall. Why do you need one? And likewise, in our case, a bank branch. Why would you put a bank branch in a shopping mall? Put it on the street, right? But the reason why banks and retailers, etc., go into shopping malls is because the shopping mall invests in what makes them good for a consumer, right? You don't have to pay to enter a shopping mall if you walk. You go in and then you have a great experience and you just happen to buy stuff. So similar for us, we saw Ringgit Plus as a place where people wanted to go first to discover, you know, how to improve their financial well-being or lifestyles before making a purchase decision. So I think that's kind of what we saw. And then just like, you know, malls invest in infrastructure, air conditioning, you know, Christmas decorations, we do the same. We invest in financial education, making sure our site is easily navigatable, etc., that increases that value to the customer.
Essentially, you're investing heavily on customer experience and your end customer, which is the users like us that are trying to go to your website and apply for credit card, bank loans, and whatnot. Okay, Ning, in regards to, you know, this particular question, what is your view on you know, how do you constantly, again, you know, capture more market with your existing business model back then when you were, you know, running Healthcrowd?
Yeah, I think it really depends. For us, we always focus on being good at one thing. And in the market, we were known for being able to, you know, scale or i.e. send out the most number of communications that were personalized and that drove people to action. And we continued to invest in that as long as we were hearing that people thought it was important and that there was a premium tied to it. And even till today, it's still important, you know, the more targeted, just like, you know, with advertising, the more targeted your advertising is, you know, the better. And with us, the more targeted our communications were, the more relevant they were, the more likely people were to take action. And it's still true today. So we didn't really have to deviate much. We just had to keep on doing and demonstrating. You can do all day long, but if you don't have case studies in the enterprise world, and you're not demonstrating and talking about and speaking at conferences with customers, right, about the successes that, you know, they have had collaborating with you, that doesn't count. So you just have to keep on evangelizing as you're continuing to improve your technology platform.
So from what Han and Ning, what I get from you guys is actually like, once you actually find your product market fit, keep on investing into your, in a way, customers' happiness. Can I put it that way? In the most simplest form. Perhaps, moving on, I think the big question is really like, what are the key metrics that, when you have achieved product market fit? Is it the GMV? What can you advise a startup here that are joining us today in this session? What's your advice on that?
Go ahead.
Yeah. You want to go first and again?
Yeah, I don't think it's so different from a lot of what we've already talked about. For me, it's just a few things. Number one, when you are selling the same software or same platform to a set of customers who are paying you market rate because of the value you provide to them. Number two, when your conversion numbers are what they should be. I'm not throwing up numbers because it's different for every industry, but as you can imagine, the funnel, right? You cold call or you outreach to, 1,000 prospects, right? How many actually respond? How many say they'll meet with you? How many show up for a Zoom meeting? How many get, become an opportunity in your pipeline? And how many go through the process and how many actually close? We had a very, very high close rate. Now with enterprise, the sales cycles were long, but our close rates were very high. So if someone did not close, it was only for, a few reasons. Close rate was high. And I think ultimately you're seeing, solid year-to-year growth. That's not professional services related. It's solid year-over-year, SaaS, recurring revenue. And every, vertical has its own numbers. For us, if you, top 50% year-over-year growth, it was pretty good if you were in healthcare selling to enterprise.
Ning, follow on to a question. What is a good year-on-year or month-to-month growth? I think this is one of the questions we are all trying to
it really
understand.
depends on the industry, right? For healthcare, for us, if it was over 50%, 50 year-over-year, it was pretty good. A lot of companies never even got around to 30%. Obviously, you want to get we were targeting, 70, 80. And that is in our, industry with the slow sales cycles, it was aggressive. But anything over 50% was looked on very favorably. But every vertical is different.
Yeah, it's different. I think for example, for us in B2C, you've got to look at the market size first before you determine what speed you want to go, right? So for us, I guess if you're sitting in Southeast Asia in a single market like Malaysia or Thailand or Philippines or Indonesia, you got to look at the size of your market. For Malaysia, I can share, like for a consumer business, if growth rate is less important than the actual number that you have. What I mean by that is, right, if it takes you like 5 years to get to 100,000 customers, right, that's okay, because the key is to get there, right? Once you get there, you can do quite a lot more with that. And for businesses, you're dealing with SMEs, right? The usual kind of hurdle rate for you to say like, hey, I've got something here is 10,000 SMEs. Like, do you have 10,000 SMEs paying you something, right? Now, how fast you get there is a function of how much you can afford to spend to get to that 10,000, right? And you've got to do your own numbers there. For me, then you work out the growth rate from those numbers. Like, I have a business at this number, right? And these are just very high level. It depends on exactly what you're doing, right? But I'm just giving specific numbers for folks who are thinking, okay, I'm building a consumer business. How fast do I need to get to what number, right? I think I can give you the end point. But how fast depends on how much you have to spend.
I guess that makes sense. And in your opinion, within fintech sector, what is a good year-on-year or month-to-month growth?
I mean, for guys who are just starting out, it should be ridiculous, right? You should go from like 10 to 20 to 100. And then numbers don't really make sense at those really early stages. Like, you go from 10 to 50 to 100 people to 500 people within weeks, right? You should be doing that anyway. But I mean, when you get to a bit bigger like us, like we're past Series B now, right? A percent a week is fine, i.e. 50% a year to 100% a year. At our size, right, is partly because we have product market fit. is what's expected. But at the much early stages, it should be ridiculous. It should be going from 10 to 50 to 100 to 500 to 1,000 to 5,000 in weeks, right? And if you're not, you haven't quite hit it, right? And yeah, so for me, that's kind of where I would go.
Actually, I would like to throw up a random question, follow-up question from, since you guys were touching upon, growth rate and whatnot. I would like to ask, maybe from startup's point of view, let's say if you guys actually got product market fit in your own home market or local market, where you call it Jirnexu, Malaysia, and then Neng, you're in US. So let's say if you were to scale beyond the region itself, and if, let's say, the space is a bit competitive, does it mean that if no matter how competitive is the space, as long as I get my product market fit, I can scale? Is this how it is? I just curious, just a question, if you guys can understand that. Yeah.
I'll just throw out that a lot of things can go wrong. A lot of startups do achieve product market fit. Oh, actually, sort of depressing, but my husband's on a board of a company that had product market fit. They were doing 20 million in ARR, and they just shut down because they couldn't raise another, well, it's, macroeconomic factors, but a lot of companies not able to raise their next round of financing right now. They've raised their seed and they can't raise A, or they raised their A, they can't raise B. And yes, lots of bad things can happen to startups. And yes, you can have product market fit and you can still shut down tomorrow. The long story short.
Wow. Okay. I think every one of us have to think twice before starting a company.
Yes, absolutely.
Slightly depressed now. To answer the question here, for us, Malaysians generally think to go regionally in Southeast Asia. It's quite a big growth market. It's big enough to stand on its own, certainly today, but definitely in the next kind of 5 to 10 years, if you have a Southeast Asian regional business, it's akin to having, a European-wide business, or someone national state business, USA business, or China business, is to go regional in Southeast Asia. It's a little bit more tricky depending on what business line you're going on, right? So for example, if you're going to e-commerce, absolutely, it's quite box standard across the region. Challenges with payments are the same, logistics are the same. You solve it in one place, you can solve it in many. The challenges go bigger, the more heterogeneous the regulatory frameworks and the specific country issues are. So for example, if you're in HR SaaS, HR laws are different in every single country in Southeast Asia, right? So you can't quite just take your HR SaaS and scale that. It just doesn't work, right? And it's not just minor differences across countries, it's huge differences. Likewise, in fintech, highly regulated industry, different regulators. Ringgit Plus being regulated by Bank Negara, and the SC means nothing to OJK in Singapore, in Indonesia, or MAS in Singapore. And you've got to go again and see if the structural problems that exist can be solved in the regulation that they set out. So it's not so easy. So it really depends on your sector. Right? So for e-commerce, you've got fine product market fit for kind of like baby clothes or whatever. And, the entire Southeast Asia has babies, so go for it, right? That's a very simple example, but you get what I mean. It really depends on your specific sector, right? For us, it's extremely difficult, and that's why there are no large regional players solving region-wide fintech issues beyond the simple stuff like payments, right? Because it's a big, huge blob of mess, kind of from a regulatory and kind of a market dislocation perspective. It's not just the same problem everywhere; it's a completely different problem. So that's kind of what I'll say to that.
I'm so sorry that I threw this question out, and really insightful thoughts, like in regards to product market fit and scalability across the region itself. I guess next question is, how big your operations team should be prior to achieving product market fit? how to know when should I scale my team? Han, you want to go first? I see you.
Most of this one. For me, the decision was made for us. Like, I love to say we planned out the whole thing. Yeah, I'll raise Series A and then B. But actually, the decision was made for us. What I mean by that is the growth rate of the business became so large that we had to, like, it was just impossible to keep. And for me, it's a good indicator when you just can't keep up. That's when you should scale your team. Your product just grown too big. Sorry, the acceptance of your product has just gone too big for your current team to handle. Be it customer service, be it your technical debt, etc. Right? But until you feel that you can really, it's not something you go like, okay, I'm measuring the stats. You can just feel it like, oh, like it's too much. Like, I need to solve this, right? Until that point, I think it will be when you're not sure if your product market fit, it's probably not a good time to invest in it to fix it, right?
So basically, wait till you burn out, then you hire a team. Is that how?
No, not you personally, not you personally, but more like when you'll know it. Like, it's just a case of you've hit something, the market takes it, and classic example, every single salesperson that walks into a bank, like, brings home the integration project, right? You go like, I don't have people to do it, but like, it needs to be done. Otherwise, we can't service the bank or insurance company, and our customers won't get the product. Our kind of consumers won't get the product. So what do? We need to, yes, we do, because I hire the people to meet the business need rather than the other way around.
Yep. Ning, do you have anything to add on to Han's comment?
Yeah, for us, it was more of a monthly exercise. We would, compare our forecasts versus our actuals. And if things were looking up and we felt confident, and these forecasts included a lot of things. They were not just models in Excel. Essentially, we went into all opportunities in the pipeline. We would discount opportunities accordingly based on how likely we thought they would close in that month. And if we felt that things were looking up, then we would hire based on our plan. If things accelerated, then we would hire ahead. If things were not looking good, then we would delay. And that worked out very well for us. I would say that sales hiring is slightly different. For us, we never hired a salesperson unless we knew exactly how they would meet or exceed quota. A lot of people hire salespeople and they expect them to produce miracles. That happens maybe 1% of the time. The other 99% of the time, you need to know how they're going to make their money. And there should be, room for them to exceed quota. And when you know that, that's when you make that hire. It's unfair to hire someone if you don't know how they're going to make quota.
I often speak to companies that always tell me, like, when I ask about, how come your growth, it's stagnant right now, and then their replies are always, oh, because I didn't get any much funding to hire more salespeople to close more sales. So what are your thoughts on like I think
very simply, for me, funding is the gap that a salesperson find that they can't fund the builders, right? So you should be able to fund your builders. If you can't fund your builders, that's when you use venture funding. But every single salesperson should be contributing as in you don't need funding to hire salespeople. You hire salespeople to fund the company, if that makes any sense. It should be it's the other way around. In my case anyway, like every single salesperson that comes in to do enterprise sales needs to not just pay for themselves, they need to pay for our builders, right, who don't do any sales. And the gap behind by that is what we use funding for, rather than
just so that the audience understand. Sorry, I think the internet is a bit cracky. So sorry. I think when you mention fund the builders, it means your DevOps.
So technology, product, finance, whatever that's not a sales function.
That's sales.
does not generate revenue, right? In fact, a salesperson should be doing. They don't directly do that, but like when you're sitting with the CFO and deciding what to do, right? That's how you should be looking at it. You should not be fundraising to hire salespeople. You should be hiring salespeople to fund your business and whatever gap that's left behind, because maybe you can't take that kind of risk. You can fund with venture capital. That's how I would look at it, rather than the other way around.
That's an interesting point of view, because usually when I see fund utilization, boom, majority of it goes to sales marketing. Yeah. Ning, just now I think you were saying something. So sorry, the internet's a bit unstable.
No worries. I was just gonna say that until the salespeople start paying for themselves, you have yourself. So you can ask them why aren't you selling? CEO should be selling. So must be the best sales for the company.
Okay, I think since our session is almost up, so I'm just going to quickly summarize, like for those that are tuning in, just to quickly summarize, what is product market fit. I think 3 metrics from Ning's and Han's conversation is: first, market rate; second, conversion number, if it makes sense; and third, growth rate. So use these 3 metrics to identify if your company or your business actually have a product market fit. I think to jump into the questions, there are a few questions in the Q&A. So I'll see who, Ning or Han, who do you guys want to answer? So I think I'm just going to ask the first question first. How do you decide when your product doesn't work? What do you do next, and how do you drive the team again? Yeah. It's a difficult question, though.
I can take this. How do you decide when your product does not work? Right? For me, it's if your entire business is the product, then it gets very difficult. But if it's just one part of your business, it's a bit easier, right? Because then you go, okay, well, I'll just reassign the team. Products come and go all the time within the business, right? So that's an easy one, which is, hey, look, like we tested this, doesn't work. Let's move on to something else within the business. It's just a product line anyway, no issue, right? We should be testing these things anyway, right? Based on the experience. But if you're going out for the first time, it's a single product that you're building, you want to test it out. How do you know when it doesn't work? When you've asked enough people to give you confidence that it doesn't work. Meaning, if you're selling to enterprise or SMEs, and you've asked enough SMEs, you've priced it low or high, and you realize that it doesn't matter how many SMEs you can sell this to, within reason, within the next 2-3 years, given our capability, then it's not going to work as it is today, right? And then you've got to either fix it or bin it, right? And for me, that's kind of the quicker you can get to that answer, the better. The best way is just to ask your target customers, right? Don't just sit there in building and hope it works. Go out with the product. Nobody's going to copy it. Don't worry. Like nobody has time, right? Go out with the product to your target customer. Go out to as many of them as go out to, and then look at your conversion metric. What Bing mentioned earlier, which is how many people are actually giving you time. How many people saying, "Yep, that looks interesting." How many people are saying, "Yep, that looks something I can buy / pay for," and then figure out what you can do within the time that you have, within the next 12 months, 24 months. Do I have enough uptake based on that initial outreach to get to a product that works, right? And for me, that's kind of, if you've got a team which is kind of iterating like that, I think it shouldn't be too hard to drive the team. Go like, hey, look, regardless of how this goes, we're going to keep moving, right? We're going to ask customers, we're going to change products or bin it or change it greatly or not change it at all, whichever, right? And for me, it's about hiring a team that has that in mind, right? Rather than just a team that comes in thinking it's going to work from day one.
Yeah, I think that makes sense. Yeah, Ning, do you have any add-ons towards Han's comment?
Yeah, I think the enterprise in some ways is a little easier, in that for us, because sales cycles were so long, for the most part, we never built anything until we knew we were going to get paid for it. And that was always enough time. So the things that we did invest in were building our core platform. So we knew, that macro trend is that, digital will transform healthcare in the US and obviously now in many other countries. And so we focus on making sure that we were investing in making the platform, the most scalable, able to do large volume communications. We invested in personalization and targeting. Those were not things customers asked for, but they were things we had to invest in to have an advantage. When it came to more things that were immediately sellable, that would help us win contracts, obviously based on those fundamentals as well, we seldom built anything that we didn't know we were going to get paid for.
I think a follow-up question in terms of the sales cycle, right? You were mentioning about you guys actually have a significantly long sales cycle because again, you are in the enterprise segment. So how do you, I've seen a lot of, honestly, maybe a lot of investors might not, they are very keen in the enterprise segment, but when it comes to when they ask you, how many months does it take for you to close this contract? And then when you answer an answer that they are not expecting to be that long, then they are like starting to, doubt it. Yeah, how do you, address that particular issue? How do you know, let's say if it's my sales cycle is 6 months and it's worth it, and investors here, I know my sales cycle is slightly long, but my business and my product, there is a significant product market fit by this by the enterprise segment. How do you know?
Yeah. So our sales cycles, depending on how big the customer was, it could either be 4 to 5 months, or 9 months, or 12 months, or 15 months. And I think you need to raise money from investors who believe in you. And our investors knew sales cycles were long, and they believed in us. And I hope we made them proud when every time we had something that we said was going to close, it always closed. Sometimes it took longer. That was not desirable, but our close rates were very, very high. But this brings in other topics like managing investors, managing a board. And we wouldn't report something as being in the last stage of the pipeline unless anything but an act of God would make it not close. That's what a commit is. And when a salesperson says it's committed for the month, it must close unless there is an act of God, right? And so, it's just that's how we run the company. And when investors understood that we were being transparent, that we were certainly, raising alarm bells early as well as what our game plan was, I think it gave them a certain level of comfort.
So basically, in a way, show them that you make them be transparent with them in terms of the sales cycle. And then second is conversion. Again, back to numbers. So these are the two items that the startup company should always bear in mind when talking to investors. That's
correct. And also they're interested in enterprise because they know that the revenue is much more stable, right? We don't have the seasonality. We don't have the ups and downs. More than 50% of our contracts were multi-year contracts, and our type of customer almost never cancel. So it was very safe, stable revenue, and they knew that.
And Han, working with banks must be, the sales cycle must be taking really, really long. Was it difficult or was it relatively easy for yourself?
Yeah, good one. Good point. I guess good time for me to bring up our experience, right? Which is enterprises are not one big monolith. There are smaller ones and there are bigger ones. There are highly political ones and highly flat ones. So for me, as you need to know your industry, and you don't, that's probably a sign that you're not ready to tackle that industry. For us, it was easier at the start because sales cycles were short. We could close clients in banks, right, in 2 to 3 months because we went after the smaller ones who had less of a competitive value advantage versus their bigger counterparts, less of the capability to distribute products versus their bigger counterparts. So the smaller banks, the smaller insurers were hungrier they close within, short months, 2-3 months kind of thing. But on the other end, right, the other end of that enterprise story is that I've, a 3-year sales cycle for a bank, right? So you start talking and you get it done in 3 years, and no startup can wait that long. But the key is to go with, to not have every single client be a 3-year client, right? You've got to have a mix of enterprises, both which are more nimble and the other which is larger, less nimble, but more lucrative. So you've got to make that balance. So that's what I would say. And if you're releasing a product to an SME, we deal a lot with SMEs as well. If an SME can't make a decision within 4 to 6 weeks, it's typically the proprietor himself. So if you can't close something in 4 to 6 weeks with the proprietor, he's probably not going to close. So I'd say, for me, that's kind of how I would advise founders, salespeople, etc.
Ning, just now you were also touching upon you guys don't build anything prior to closing the contract. Just I think like in Malaysian, working with larger companies, there's always like a pilot session where you probably need to build something so that they can test it out, see if it works. Yeah,
we most certainly had something, but if there was anything like specific that we hadn't thought of, and unless we knew that they were going to most likely sign, we would not go out of our way to build it, unless of course we knew that we were going to get a pilot and probability is high and there was no way out. Truth be told, the first 4 years of the company, we never had a demo. Everything was from deck to signature. Somehow, some way, we were able to avoid ever having to demo anything. And it was very convenient.
So maybe one more question from the audience. Is there any metrics you prepare before you launch your product? I know that you guys have already touched upon this 3 different metrics. Maybe just to sum it up, what maybe a quick repeat.
Yeah. I'll let Bing talk about the enterprise side, and I'll talk more about SME consumer. In terms of metrics, is really 3 or 4 things. Right? Number 1, what's your conversion rate from either page view or phone call, right? What's your conversion rate? Is it healthy? To find out what's healthy, you've got to do the back calculation of how many you need to actually run a business. Second is, what is the NPS, Net Promoter Score, of either your initial kind of beta customers or your initial kind of launch customers or free customers, or even a focus group. It's really cheap to do them here in Southeast Asia. Like, is it positive, right? Or if it's not, you better fix it first, right? User survey in Southeast Asia is super cheap to do, right? And then how much of the market do you actually have? Have you actually tested, right? So for example, it's worth spending a little bit of money pre-launching the product. It's fine, just put it out there, pre-launch it, and start targeting some SMEs, not to kind of actually launch your product, but to get the numbers that you need. Doesn't matter if 100 or 1,000 SMEs actually see your ads and encounter your product, if there's 1 million more to go, right? But those kind of 100, a few hundred to 1,000 first people, SMEs that experience your product, will be able to give you all the as much as rich details you need, right, in terms of these conversion rates, NPS, etc., before you actually formally launch your product. So don't just hide it in your VM, right? Get it out there. It's okay. It doesn't have to be perfect, but you do it out there to get the feedback, right? You're not inviting like 10 different media outlets to come in and interview you, right? You're just putting out there to get the numbers that you need to make the decision. Numbers like NPS, conversion rates, etc.
Ning, do you have anything to add?
Yeah, I think in the enterprise world, you don't really launch. You do lots of pilots, and you're hustling to get pilots, because in the early days, they're not that easy to get, especially if you're trying to get paid for the pilot too. And you should get paid for the pilot, because you don't get paid, that means you won't have their attention. It's of no value. You must be smart about the pilots. The pilots must prove that you do something so much better that you're going to waive that case study, talk about it at an industry conference, do your, demand gen, whatever, right? You're going to use these first few case studies to land, your next several dozen customers. Funnily enough, in 2021, we were still using 2015 case studies. Not saying that we didn't develop more, but that's what you're trying to do in the early stages of an enterprise startup.
I guess one last question, since since both of you guys have already mentioned, don't get VC funding until you actually get your product market fit. So who will be funding the journey when you are getting product market fit?
Well, that's a great question. For us, it was a little bit of my my co-founder and myself taking reduced salaries. But in the early days, we found a way to get customers to pay us while we were trying to find product market fit. There were customers who agreed that digital was the path forward. And of course, they were early adopters. And as long as they wanted something that our platform could do without much inconvenience, we said, yes, we'll do it. Now, just pay us. And we did that for a while we were figuring out what are the right use cases, which ones are easiest to sell, which ones are a must, which use cases make us a must-have. But that doesn't mean you have nothing. You must have something you can sell that's of value while you're trying to get there. So that's what we did.
Well, I mean, for us in Southeast Asia in 2011, there wasn't VC funding anyway. So that helps. No, that doesn't help or helps with the question, I guess. I mean, we bootstrapped a lot, right? And basically we invested every single thing that we got from a client back into the business. What being said, right? Like, I mean, doesn't cost much to live in Southeast Asia, in Malaysia particularly. So that helps. But the point here is,
Han, I think your line is breaking. I think we lost you there.
At least it's a thoughtful pose, not like with his tongue sticking out or something.
That is true. Yep, I guess we officially lost him. He's been frozen like that for quite some time. Yep, I think he's gone. So I'm just going to quickly mute him. I'm just gonna quickly close it up, our session. So first off, Ning and Han, thank you so much for, there he goes, he's missing again. Thank you so much for Ning, especially you dialing in from the US, and Han as well, who is not here, joining us in this session, sharing very insightful thoughts on product market fit. I think we learned quite a fair bit of things here, which is really, I've never really thought about it. Honestly, when I asked like who would be funding your journey to achieving product market fit, I actually expected something like angel investor or the 3Fs, friends, family, and fools. But in short, it's actually just customers. Just find someone that is willing to pay for you. Otherwise, like that's just not starting up, right? I think a lot of startups also doesn't really have the luxury to get any sort of funding from the FFS or even angel investors. Han, I think we lost you there. Just to keep you posted, I think we're just gonna quickly close up the session. But before I do that, do you want to quickly do a 10-second kind of thought on what you just mentioned just now?
Yeah, no, for me it was just back then there wasn't much VC funding. There is far more right now. So for me, just get your product up and speak to people like you guys, right? The Hive, and many of these now seed VCs around, right? It's a lot easier now than it was, I can promise you. just get going. Don't hesitate. But focus on building a product, right? And getting those things out, and don't just focus on just building, but getting out, soft launching it to get the feedback you need to build it faster and better. So that's what I'll say.
So launch it. Doesn't matter if the product's perfect. As long as you, in a way, get paid, then you're in the right track. Satisfy the customer further. In short. Okay, so again, thank you so much. I'm going to quickly repeat this because just now Han wasn't really in the call. Han, thank you again so much for joining our session. Ning, thanks for dialing in. I know it's pretty late over there in the US. Thank you so much for joining this session and share about your thoughts. Yeah, I think from the startup side, you know, like guys, I understand that sometimes you guys need to get funding to grow the company bigger, but I think this time around, I've also myself also learned something really interesting from both serial entrepreneurs, Malaysian entrepreneurs, but I know Ning that have already, you know, currently in the US, and
Malaysian.
We would love to have you here in the local ecosystem. I mean, like we have not. I think you're in a way, you're probably the first few pioneers that actually exited a company and female CEO.
I'll come back later.
Yeah. So hopefully that when you come back and then we can have a session together, and you know, maybe we can invite more startups on the local scene to learn from, you know, both of you guys. Han, you as well. You've built a really remarkable company. I've just used your product. It's amazing. Really easy. And yeah, I hope everyone that is in the panel today actually have a really a good takeaway, and hopefully that, you know, the speakers and panels and we actually help you in a way making the how more straightforward in achieving your product market fit today. Thank you so much for this session. I'm going to close this session right now. Thanks again, Ning and Han. Yeah. Oliver, maybe you can. Thank you so much.
Thank you. I'll go ahead and close it out.
Yeah. Thanks, Han.
Bye.
Thanks, Han.